that it is not only people who have been involved in the, as a certified professional to carry out, or in a professional services firm, as a chartered accountant firm, also those people who are not in practice, and that is what assumes significant importance. Many of us have this both the audits and the tax. Now they brought in this wall of where that you cannot carry out certain activities which are in the nature of what is called as conflicting. So there are certain changes that are coming through as a process. So therefore, as a part of the recommendations to which each one of you take an oath on this formation day, demonstrate, there's so much of pride. Your past Central Council member talked about being the first building. Take the pride that you be the first branch which talks about ethics as a walk of life. And I think that is what is very, very essential for us. I think this is what we need. It is basically when somebody talks about ethics, it's basically nothing but your moral principles. That's all it is. That means, am I conducting, is my behavior appropriate? It is not about whether somebody is looking at it or not. For instance, a behavior can be easily related to, let's say I'm driving a vehicle and I'm standing in a traffic island with a red signal. Nobody is there and no one is there. It's early in the morning. I just drive past whom I don't stop. Somebody might ask you, why didn't you stop? Because there is a red light. You might say, hey, listen, this is morning time. Nobody is there. Absolutely, they are wasting their energy, and therefore I have got a right of way because I'm not hurting anybody. But that is not the behavior we're expecting in a professional services firm. The behavior is that if you are representing a client, if you're representing a stakeholder, you're expected to perform in the manner in which whether the stakeholder or the regulator expect you to. With so many changes that are coming through in laws, I think this becomes very, very essential. Going forward, as much as George talked about the TCS about 75% working from home, I think the order of the day is we should now follow the 75% rule of being right always. I would say 100% should be right, but 75% also we achieve it. I think we have achieved a great milestone. Now, when we talk about professional ethics, and I said because chartered accountants are basically a professional, and when you talk about, when the Prime Minister talks about building partners and building nation, when we talk about all of these, we have a responsibility. When we have a responsibility, we should also adhere to that. We should also expect and meet that expectations. And I think that behavior makes huge difference. Why do you need a code of ethics? I think somebody might say, why do you need a rule? Probably that you may not need a rule because you're all professionals, you're all chartered accountants, you're expected to perform. But sometimes it is that regulator who wants to get confidence that, or the public wants to get a confidence that you're complying to a particular code which prescribes that these are permissible, these are not permissible, and therefore probably that is one way of looking at is enhancing the confidence of regulators and public. Somebody might ask, sir, you're all fine, we talk about ethics, we're finding so many issues, so many frauds, so many things are there. I think what is very important is you should look at ourselves and say, are you doing things ethically right? I think that is what the question you should ask, not the other way around that, so many people are doing, I can also do that. And I think that is where we need to drive that. It is we as professionals should drive that, only then you'll be in a position to command the respect and the confidence of the regulators and the public at large. And what's a code? It's something like, if you are a chartered accountant, you're bounded by the Institute of Chartered Accountants of India, by the ICAI rules, you're bounded by the, suppose you're auditing the listed companies, you're bounded by the SEBI rules. if you're auditing any of the government-related, whether the C&AG audits or the bank audits, you're governed by RBI or IRDA or electricity, whatever the case may be. There are certain code of conducts which are prescribed, for which we also write in our audit report that we comply to all ethical standards issued by the ICAI. We ourselves in all of the audit reports, if you see, we have been writing that we comply to all of these. And I think what is essential for us is, have we really complied to that? I think that's where the question everybody is asking. Now, you might say that, there are only few of them who are actually big people, they're doing it. The rest of the people are not there. They're all doing right. I think what's important here is, whether it's a big or a small, what is important is the impact of being a professional is actually damaged. So therefore, what is important is, we have to reassure, whether it is big, small, medium, whatever it is, we have to reassure back to them. And that's the reason why year after year, period after period, there are more regulators who are coming, who are becoming an oversight on the professionals. I think we have to get back to the laurels, and I always admire, all the old, the professionals, the chartered accountants from the age of pre-era 85 or 90, where they really stood for ethics. And I think we have to come back to that. We have to come back to that principle of where anyone, if you see as an auditor who has actually been there up to the prior to 90 period, every client used to stand and respect. Respect not for anything else. Respect for the knowledge, respect for the ethical principles that this person will not do anything wrong. And the fear that an auditor might question was in the minds of the client. Today, post the 90, post the liberalization, post the globalization, everything has become a business. And I think that is where we need to come back to that era of where reassure to the regulator, reassure to the public, reassure to the stakeholders that we stand on the principles which is called a code of conduct. You can call it whatever is a Lakshman Rekha, call whatever it is, that we abide by that. And I think that is what is very, very essential for all of us. Now, it's very, very important. You can write anything on the board. You can give volumes and volumes and volumes on ethics. But I think what is important is, we should remember that we as a professional should always act ethically at all times. There is nothing called one as an exception, two as an exception. It is always at all times that we need to be ethically correct. And I think that is what will drive confidence back to the government, confidence back to the investor community. Now, if you were to look at ICAI, and ICAI has been in the forefront, and in fact, a lot of the Central Council members have contributed significantly into all of these, drafting the code of ethics. And I think this is very, very essential. Way back in 1960s, that's where it started, and there have been more than 12 revisions which has happened. But today, when we talk about it, the ICAI is now aligned with the international standards. And I think that is where the whole shift has become. There is terminologies changes. There is a description that have been brought in. There are clauses that have been included, the manner in which we will look at each of them as we go across. So as I mentioned, it's 1963 is the first time we had the commentary on ethical principles. It got revised 12 times before the 1st July 2020. Now, what is very, very important is, how do you, as a professional, and when we talk about a leader, we are talking about us as a professionals. Now, when you think that as a professional, that whatever you do is right, always right, even the associates, even the articles, even the managers, even the client, when they look at you, they will define you for your behavior. Ethical is a behavior, and a behavior which is put into practice. And I think that is what drives this particular curriculum. So let's look at the ISBAs in terms of, it's called an ISBA, it's called the International Ethics Standard Course for Accountants. In fact, based on this code, which got, the first edition, 11th edition, which happened in 2009 by the ICAI, aligned with the ICAI's Code of Ethics of 2005. Thereafter, there have been revisions in 2018, which now comes the 2020, which is our Code of Ethics. And I think that's the background. So therefore, when we talk about ethics, we also look at why are we looking at global? Somebody might ask, why can't we do it here? I think the answer is to some extent yes, some extent no. But somebody might say, any case we have got accounting standards from IFRS, any case we have got a lot of these companies act from UK. Why not we also have this ethical standards code from the International Ethics Standards Board for Accounting? And I think since we are all global village, so we don't have to make a distinction that your rule is different in India versus the rules. So earlier we had this Indian accounting standards, the accounting standards and the Ind AS standards. Now, why do you need to have a difference? If you have the same ethical principles, same accounting standards, same benchmarking, your financial statement that you are associated with or signed should be accepted globally without any challenge. And I think when we have accounting standard, we should also have this code of ethics that will be followed. Now, if you look at it, there are a lot of changes that has been brought in. Now, what are the things that have been brought in into this? Because of the revisions in the accounting standard, there was a necessity to change the code of ethics. Because there was the ISPA's revised code, there was a need for us to do it. Now, what does this code bring about? Now, you cannot say that we will continue with the old code without making changes. I think then it becomes challenging for us. Now, given that worldwide, where there has been a lot of noise, even within India, to break the audit firm into audit, which is purely audit firms, and those which are non-audit, like your tax and all that, is a non-audit firm. Now, the reason why this has become, and this is essential also, is what happens is when you are an auditor, there is a tendency to say that we will also do the tax work, we'll also do the tax representations. So therefore, there is a conflict which happens between the audit that you carry out in terms of the statutory audit which is required under the regulation versus the tax related matters which are not bounded by a regulation. So I think those are the things which will have a lot of challenges in terms of the conflicts. Not only this, there are sometimes you might do some sort of a due diligence, you might do some sort of an IT system work. There are various things which keeps coming through it, and you might say, hey, listen, in our audit report, we noted there is an internal control deficiency, there are things which have been identified. So therefore, we may want your firm because you know it, so we want your firm to do it. I think time that when we talk about controls, when we talk about independence, these becomes very, very essential. So therefore, what is important is this code has brought in certain new definition, new concept, like the public interest entity concept, the taxation service to audit assessment, the threat to independence. And I think this threat to independence was there as a part of SQC1. Today, this has become a part of the code of ethics. Whilst the SQC1 still continues, that is also going to undergo change. It becomes ISQMM, which is in line with the international standards on quality monitoring. Similarly, even in India, you will have the SQC1 undergoing changes shortly in the coming years. But having said that, the changes that really is going to impact is the assessment for the threat to independence. And I think one of the aspects that came up is substantial fees coming from a client. Now you take the case of Ernakulam branch. Or those people who are practicing in and around the Ernakulam. Now you will find that they will have one or two clients which may contribute about 40%, 50%, 60%. That is what is called a threat, and a threat for independence. Now, earlier it was about 40%, now they've undergone change. So we will look about what are these things. Another concept which has been brought in called the NOCLAR. NOCLAR is nothing but the non-compliance laws and regulations. This was not there before. We do have in the auditing standards in respect of all of these, which was so far not available as a part of the review. Now going forward, the NOCLAR will be applicable for all the listed companies, and that is where it becomes essential. The other aspect that has been brought in is in terms of bringing what is called as a whistleblower, and I'll touch upon some of the fraudulent aspects that which is there. More stringent has been brought in the code relating to the auditor's rotation or the auditor's resignation. I think that is very, very essential. There are responsibilities for the incoming auditor which we need to look at. Now, going forward in terms of the changes, what has been brought in is that the fees in respect of any single client exceeds 15% of the total fees. That means, let's say, a CA firm earns about 10 lakhs in a year, and one client contributes about 2 lakhs. And typically, because you are in a small, let's say you are in a Mofussil area or a Tier 2 city, there are no larger clients. So there are clients which are, one or two who really contribute to you. Now, what the new code of ethics says is that from a single client, you cannot have beyond 15% of the total fee. That means at no point in time you can have any amount exceeding 1,50,000. I think this is a great shift which has been brought in, and I think that is also because these type of challenges that one faces, because obviously there is an intimidation that happens. There is the client who will say, I am the guy who is paying you so much, nobody else paying you. So therefore these are certain things which will come through it. But this is not applicable if the gross fee of the firm does not exceed 5 lakhs and the PSU fees are not equal to the total fee. Now, this is a significant part. Whilst there are noises that have been raised and therefore certain aspects have been deferred, I think you cannot be deferring everything just because you make a law and say keep on deferring it. I think that becomes a challenge. But also I would say that if it is not today, tomorrow it will be included. Same is the case, there are restrictions of providing taxation and management services. Now if you see, this is where the challenges comes even with the institute. Because the institutes have to partner all the SM practitioners before they come and agree to this. You cannot make a law and therefore come back and say these are deferred. Because it's going to this is a low-hanging fruit which will keep continuing coming to you and say, hey, why have you not included this? At some point in time, this will be made mandatory. And I think this is where one has to look at it. You as a professional services firm, we as a professional services firm, everyone as a professional services firm need to be cognizant whether it is mandatory or not. At some point in time, this will come into it. Therefore, bring all those restrictions, make sure that this does not conflict going forward. So therefore, if let's say, if your tax team is involved in preparing the computation of taxable income for the purpose of computing the tax, and therefore the client pays you services, that is not permissible because they are called as management services. Now, another aspect of it which has been brought, not only the audit, they've also brought in concept for others assurance engagement. So therefore, there is an independence requirement for audit and review. There is a requirement for the other assurance engagements. And I think those are the things which will make huge difference. There is also a duty of accountants for the unintentional breach of independence standards. And I think this somebody has to think through, pause, understand. For instance, you are the auditor of a company or a bank, because these are, let's say, you're auditor of a bank. Some of your relative who is dependent who went and took a loan, an education loan from that bank. Now the question then comes up, has this breached independence? And if you are the statutory auditor of the bank and the person is independent, it falls under the definition. Therefore, it becomes an unintentional breach. And if unknowingly, let's say it has come through, or you've taken a loan and then you've got the bank audit, then you've not checked through this. There is a responsibility on account of the accountant. There is a beautiful definition which has been there. It talks about employment, it talks about various other aspects of which we'll talk about. There is also clarity for responsible for compliance of firms, networks, for individuals. If you were to see in India, there are about more than 170 firms, Indian firms, which have got associations or networks. Not necessarily the big fours which you have, but there are also about 170 of them which have got networks. And there has been a lot of clarity and responsibility brought in for compliance. Another introduction of the concept called the professional accountant has been introduced. And this professional accountant has been definition which has been borrowed from the ISBA's code. It is not there in the India, but there's nothing called a professional accountant. He's a chartered accountant or a chief financial officer. There's nothing called a professional accountant. But this concept you will keep on hearing as we go forward in this code of ethics. So let's look at what are the differences between the code of ethics of 2009 versus 2019. Now, as I said, the key important thing which has brought in is a non-compliance of laws and regulations. Now, there was no such provision in the old code of ethics of 2009, but the new provision brings in if there are non-compliances, and which is very, very critical. So what is the, for instance, what is the example for a non-compliance? There is a pollution certificate that has to be received. Or there should be a, let's say you are working in an SEZ, you need to comply to that law. Now, assuming that the client that you are auditing does not comply to all of this. Now, this is something which has to be brought in, and this has been covered under the code of ethics. It is not covered earlier, there was no such provision. But today, knowingly you cannot. Or take another example which you said. You have got the hypothecation of stocks, for going to any working capital loan, you've got the hypothecation of stocks and fixed assets. You know as an auditor that, the stock statements that are given to the bank may not necessarily be audited by you. And if you make an analysis that a particular stock statement has been given the same information to more than one bank and the loans have been drawn against to each of them, and if you believe that they have not complied to it, it is your responsibility to raise this aspect of it, and therefore this becomes a responsibility. Now, this has right now been put only for the listed companies, but my guess is this next couple of years, one more challenge, you will have all of these becoming mandatory. The other aspect of it which has been brought in is the restrictions on taxation service to audit clients. Now, taxation services, typically if you're a statutory auditor, you also do a tax audit or a tax assistance and all of this. Now, they've identified which are called as the advocacy threat or a self-review threat. Tax return preparation based upon the numbers is not an issue. But tax calculation, which I said, for the purpose of preparing accounting entries, because the client will come back and say, I don't have any information, I don't have any knowledge. Why don't you ask your tax team to do it? I will pay money. That is a problem. Tax planning and tax assistance in resolving disputes. There are so many cases in, let's say, in department, it is in appeals, it is in various levels. All of these will come under self-review threat. And this is the biggest challenge because majority of the professional services firms, the chartered accountant firms in India have got audit and tax as a part of it. Now, when this change is coming, and again, let me tell you why this is important. Government is coming through a different route of segregating audit firm to tax. Code of ethics says you cannot be doing this tax. And I think when the government makes a rule, you might have deferred this, when the government makes a rule, then you may have to break it between an audit firm and a tax firm. So therefore, tomorrow what you will have professionals who are only doing audits, or there are only professionals who do tax. I think probably the charm in audit is gone. So probably we might say, why take a risk when the penalties are huge? Let's go and do only the tax. And I think that's where the issues comes to it. Now let's say you take the case of tax also. If there are non-compliance to the tax laws, whether it is your indirect tax or a direct tax, whether it is a GST or a direct tax, I think any non-compliance also would have a challenge. We talked about this fees, that restriction fees is about 15%. Earlier it was 40%, now they've reduced to 15%. Now, the other aspect of it, duty of accountant in respect of unintentional breach, there are, once a breach is identified, the accountant, professional accountant, which has been defined, should take necessarily steps to inform the authorities. There are various steps that have been brought in Part A and Part B. The independence requirements was there as a part of the assurance engagements. Now there are certain things or audit is separate and other insurance is completely separate. And there is a separate code standard which has been brought in as called the International Independent Standards. There have been some changes in the advertisement guidelines and the Council General Guidelines that member firms' names allowed in TV, movie credits, not provided, not mentioned differently, interviews should be factual. These are some of the things which have been brought up. Now, interestingly, this also brings in to address a lot of these chartered accountants who also participate in many of, as an educator or teaching some of the CA students. There are restrictions that have been brought in. I'll talk about that as we go on. There is no medicine to deal with ethical dilemmas at work. You cannot have a medicine. And I think it's very, very important. The medicine is your own self. The medicine is your moral principles that should be driving it. So let's look at some of the key aspects of it. One of the key aspects, again, these volumes. Now, if you look at ethics, there are about 3 volumes. Volume 1, Volume 2, and Volume 3. Volume 3 is more about the disciplinary cases. I'm just going to focus on key aspects of Volume 1 and Volume 2. The new definition that has been brought in is the definition of other audit partner. Now, there was, you had an engagement partner which was being defined. There is an engagement quality control review partner which has been defined. There is no audit partner that has not been defined. So therefore, now they have brought in the definition of other audit partners. Now, why these are essentials? These are essentials because, let's say, based upon the SQC1, the Standards on Quality Control 1, a particular partner should rotate off after a period of 7 years. So you had a senior partner who was involved in that engagement. Now he is rotated off. So no longer is called the engagement partner. You appoint a junior partner. But the senior partner still continues to be the other audit partner. He says, don't worry, I'm still there, I will take care. To bridge that aspect of it, for circumventing it, they brought in this concept of other audit partners. And I think that is where this becomes very, very important. Now, the Code of Ethics of 2019 defines public interest entity. And I think public interest entity was not defined in the Code of Ethics. All public interest entity was only defined under the Companies Act or any other act that was issued by a regulator. Today it talks about a listed entity, defines by regulations, audit is required by legislations, banks, insurance companies, all of these gets covered under this one. ISBA I talked to you about the professional accountant. I think this is a new name that has been brought in as professional accountant. Now, professional accountant is again, there are 2 things which one has to understand. Professional accountant in practice, professional accountant service, these are things which you need to understand much, much more clearly. So the Code of Ethics are divided into 3 volumes, as I mentioned earlier. The principles based on ISBA, the domestic provisions governing the members, the Volume 2 and the Volume 3 is the discipline cases decided so far. These are all factuals. But what is important is the Volume 1 and some changes that have been brought in Volume 2. Volume 2, to larger extent, there are only marginal changes, but the bigger changes have been brought in Volume 1. So in a Volume 1, when you look at it, there are various glossaries which has been included, including in each of the paragraphs where sections have been easily been identified and each of the sections have been made and respective related matters are included. So the part 1 is applicable to all the professional accountants. That means if you are a professional accountant, it is applicable. So you're breaking down the Volume 1 into Part 1, Part 2 and Part 3. Part 1 is to all the accountants, that means the chartered accountants in practice. The Part 1 is to all, irrespective whether it is in business or in practice. Part 2 is only for the people in business. Part 3 is those people are in public practice. So therefore, one which is applicable to all, one which are applicable only to those people who are in business, one which are applicable to those in practice. So this is the categorization that has been brought in. So when you look at the sections from 100 to 199, fundamentally brings about all of these. Now again, if you look at it, if you have gone through the SQC1, it talks about the integrity, objectivity, professional competence, confidentiality, professional behavior. If you've gone through SQC1, all of these are being included in this. So therefore, if you have done if you're following SQC1, that means you have complied to certain principles which are defined under section 100. So you look at integrity, being straightforward and honest, objectivity, not to compromise, professional competence and due care, confidentiality, do not share any information or a relationship. Now, what are the things which are very, very important? So at times there are certain circumstances which might create a threat. So when it creates a threat, the professional accountant, which is in this case, let's say, a chartered accountant in practice or business, should exercise professional judgment, should remain alert, should be reasonable and inform the third party. So therefore, they're all talking about not only that you exercise judgment, but let's say if a third party comes and inspects this, they are well informed as that you pass through the test of that. So therefore, a test that needs to be performed in respect of these frameworks have to be completed. So therefore, it is very, very important. Earlier, there was no questions that were included as a part of the concept framework. Today, you are including all of that. So when you talk about self-interest threat, right? When you talk about self-interest threat, is like, let's say you're the auditor of a company, and then you're trading with shares or borrowed some money. There are called the financial and other interest. Or somebody might say, hey, listen, you're auditing my real estate company. I will give you a house at 40% discount, but I want you my financial statements to combine. So therefore, there is a self-interest threat which can come through it. Also, there is a self-review threat which comes through it. A self-review threat is that, whatever the management gives to you, you believe they have done appropriately, whether it's a provision for doubtful debts or an impairment of assets. Those are the things which becomes, you believe that whatever the judgment, till last year nothing has happened, this year also nothing will happen. So therefore the self-review threat becomes important. The advocacy threat. Now the advocacy threat is, let's say you go and say promote your own client. Let's say you have got a client which is into, let's say education. So you say, go and tell everybody that I have a client, please look at it. Or let's say it's an insurance. You go and tell everybody, all the other clients, why don't you buy, the insurance policy from these things? So this advocacy threat becomes important. The familiarity threat. And the familiarity threat is again a long association with larger clients. In India, unfortunately, we have not been able to make a segregation relating to that. Because if you see, majority of the firms have got this association for a long period of time. I think whilst the Companies Act do bring in the changes, but I think what is important is in respect of the familiarity threat, you need to reduce dependence on any of this kind. And the next one is the intimidation threat. The intimidation threat is quite common. When we say that, he's a big man, right? When you go to a client, when you go to a promoter, he says that there's a big man, he's a politician, he's this, he's got influential, he can do anything. The intimidation threat is what becomes very, very important. I think these are the things that we know. We say, okay, fine, nothing will happen to us. I think what really happens is that when the going is good, nobody touches you. When the going is tough, everybody says, pinpoints finger at you and say, hey, what you've done is not right. And I think this is where we need to start thinking right from the beginning. And I think these are the threats that one has to address. Evaluating threats, every threat you need to evaluate at an acceptable level. Again, you cannot be say that acceptable level is something that others are doing, so therefore I'm doing. No, that is not an acceptable level. If you believe that if you had carried out processes in the manner in which you as a professional would have carried out, and you would have come to the same conclusion, probably that is what is called an acceptable level. And I think these are some, when in doubt, when you think that, maybe I'm not doing right, you consult somebody with a professional to make sure these safeguards are done. So what are important things? Independence of professional accountants, independent statutes, professional skepticism, compliance with fundamental principles. These are some of the things which have been brought in. Now, this framework, which was not there before, is the key requirements for professional accountants in service. Now, this is where you have to be very, very careful. While the Institute has come back with so many changes that in respect of the professional practice, that even if you have not applied for membership in 3 years, your name will be taken, you can't be using as chartered accountant. Now, this becomes very, very important. When you are in practice, this becomes also very, very important. So, applying the conceptual framework, you still need to apply to it. You still need to look at the threats to compliance. You still should not have conflict of interest. You should not pass on information which will be misleading. You should be acting with sufficient. Just imagine, you are a CFO of a company. You are a chartered accountant. You are handling all of this. You can't do any of these things. A conflict of interest to judgment includes like giving my business to any of my relatives or any of that matters, or taking any discounts from this, from within the businesses. So I think these are some of the things one needs to look at it. And I think there is a lot of deliberations has to go through, a lot of education has to go through the professional accountants in service. Financial interest compensation link should not manipulate. Now, this is where it becomes very, very dangerous, because so far there has been no rule for a CFO if he has committed any crime. Now, by manipulating, let's say for instance, if he has manipulated any of the inventory records, if he has manipulated any of the information to source first so that he can get the funding, I think that is where it becomes very, very difficult. So we have to be very, very clear in respect of these aspects of it. Responding to the nuclear, again I'll talk about which are the things which is there. Pressure to breach the fundamental principles, make sure these are things. Inducement to gifts and hospitality, and I think this again assumes significant. Now you need to identify what is the behavior of a gift. Maybe treating somebody, or let's say there is a marriage in the family of the promoter in which you audit. The promoter says, don't worry sir, you bring all your family, everything is to my account. And he debits that expenditure as his business expenditure. You are auditing it. You've enjoyed all his benefits. You've done all of this. Now from a peer in service, for the CFO it's a problem, and also for the chartered accountant it's a problem. So think through these aspects of it. Pressure to breach the fundamental principles. Many of the CEOs, the promoters will always come back to the CFO and say, do something so that I can get the funds. Do something where I can get the results. Make sure there is only profit. I think these are some things which are very, very difficult, which was not there before, has been brought in. Now the no-clear. No-clear is nothing but the non-compliance with the laws and regulations. Now, any act of omission or commission committed by a client or an employer should be prima facie, should be brought in. Now, I think this becomes very, very important. Today, you just see there was let's say a fire accident somewhere. So immediately everybody comes back and says there was no pollution certificate, they did not do it. Or let's say there was some accident in the factory and therefore a workman's compensation is not. Suddenly somebody might say they have not got any permission. Same is the case with the pollution control board, effluent treatment, something went wrong. Now all of these come through it. Now when everything comes through, now the recent one which is a listed company which happened was, the CFO involved in what is called as insider trading. Now the question then comes up, which year does it relate? It does not relate to current year. It relates to earlier period. I think those are the things that one has to look at it from that perspective. And I think this is something, the new provision on non-compliance. These were there as a part of the auditing standards. But now they're brought as a part of the ethical standard. And ethical standard, non-compliance to this becomes, being non-compliance to ethical standards becomes a challenge. Applicability right now is applicable to audit engagements, listed companies, and applicable to employees of listed entities. So therefore, all this non-compliance. So therefore, when you are talking to your client, you need to tell them that these are the things which are very, very essential. And I think these are very comprehensively written. Now, examples of laws of frauds, corruption, bribery, laundering, terrorist financing, proceeds of crime, securities master trading. So these are the examples that have been already talked about. Now, certain things are inconsequential. So let's say there is something which comes up, somebody raises a complaint, and something which is not related to the client, is related to the promoters, may be excluded from a non-clerk. But anything which is related to it, the only person who's can decide in respect of any of the activity, trading activities, or any of the shares related matters would be in respect of SEBI. So therefore, when you are talking about any such issues, whether it is insider trading or if pledging of shares which are not in compliance, you are responsible to report it to SEBI. Right now, they have deferred it because a lot of noises have been raised, but I think going forward, these things would be there. What are the key requirements for the PAs in service? Other things, apart from the conceptual framework, conflicts of interest, professional appointment, that means you need to comply with the KIC norms of ICAI, communicate with the previous PAs, proposed PAs, all of these which comes very, very important. Now, just look at these. These were there beforehand, but now these have become as a part of the PAs in public practice. So these are now become in writing, which were there included as a part of SQC, which were lying some part of ethics, but now clearly brought in as a part of the ethics code of conduct of 2019. So I think this is where you need to be very, very clear. Because communicating with the previous professional accountant, that means we say erstwhile auditor, communication with the earlier auditor. Now, these are certain things which has been brought in, which is of very, very important things for each one of us. Now, one of the things which the client used to use is that they used to always get an opinion. So let's say there is an accounting where there is a dispute by the chartered accountant who is a statutory auditor. Now, what has happened really is that many of the CA firms says, okay, you go and get an opinion from this firm, they are very good in accounting, they can give. Now you can no longer give any such opinion. I think because what happens is it creates a threat to those persons who are issuing an opinion. I think that is what is very, very important. Contingent fees, there are certain exceptions which cannot be done. Again, this is covered from the Code of Ethics. Custodian of client assets, you should not hold any asset or any books which will threaten your compliance. So there are certain things which have been brought. Gift I've already talked about. So what are the other requirements is independence. Independence is again been brought in. Again, when they talk about independence, it is more in the appearance, more in the manner in which you deal with each of the transactions. So I think that is very, very essential. Also talk about in the fees, one of the things which I would also urge each one of you as professionals, I think please do not charge when the compliances are going up. Why are you charging fees which are much, much lower? Charge fees which are appropriate, which compensates for the services. Do not charge fees something because you're getting a business. And I think these are some things which are very, very essential. The other aspect of it which has been brought in practice is that you cannot force a key audit partner to go and sell non-assurance services. In other words, if you're auditor, you're signing audit, you cannot force somebody and say, go and sell tax audit service works, or go and sell IT work, go and sell any other consulting work. So I think these are the things with the policies have to be brought into it. Acceptance of gifts also will again be repeated because it will be repeated time and again because that's one in business, one in practice, and one in general. Financial interest, again, holding a financial interest in audit client is not permissible. It is applicable to the, also not only to you. Suppose you are a member of a network firm, even they should not hold it. Even your audit team members should not hold it. That means there is more comprehensive review which is required as a part of the process. Loans and guarantees, again it is not, answer is completely no, while the standard, while the Companies Act requires it, but now the Code of Ethics has been also been brought in, which talks about no loans, no guarantees, no brokerage loans, all of these are not, no business relationship, you cannot have a business relationship, you cannot have a family and personal relationship. Imagine the comprehensive things that have been brought in, even in for service, not only for practice, they've also brought in for services. Recent service with an audit client, if any audit member has recently served as director office, you cannot go and join the companies and therefore that becomes a challenge. So there are certain restrictions. As a partner, if you've been a partner and suddenly go and join as a director, there are restrictions, you cannot be serving. There is a cool-off period that is required. You cannot have employment with audit clients. The employment relationship should not be there. That means you cannot be as a CFO go and tell, okay, I have got my wife, I've got my niece, or I've got somebody. Can you take him in your audit function? Can you take him in tax and train him? So these are the things which are not permissible. So therefore, from a CFO side, also you need to look at it. So far, we have only looked at from an auditor side. Now we are looking from a PA in service. That means from a CFO side, you cannot do it. So just imagine the expansion of the roles that has been brought in. Temporary personal assignments is not allowed. You cannot be deputing somebody as a loan to an audit client. You cannot say just to gain experience, you cannot be doing it. So these are some of the things which have been brought in. Other aspect of it is long association of personnel with an audit client. They brought in very, very important. One of the things which they brought in, apart from 7 years, earlier it was 2 years schooling period. Now if you're an engagement partner, you cannot come back until the next 5 years. That means after 12 years, that means 7 plus 5, only the 12th, 13th year you can come back as an engagement partner. That means if you've audited, let's say, an XY company for 7 years, you cannot serve that for next 5 years. You cannot serve as a key audit partner, you cannot serve as an engagement partner. You cannot be associated with it. Let's say if you are an EQCR for 7 years, a cooling period of 3 years. If you are a key audit partner for 7 years, then 2 years. And if you are both, then it's the cumulative of that which you need to look at. So therefore, they brought in very, very specific part of it in respect of such PAs in service and PAs in practice. Auditors rotations again is in compliance with this. EPF scheme is again re-emphasized that same auditor cannot be appointed for 2 years. Maximum that he can be appointed as an auditor of a PF trust or this thing is only 2 in a block of 6. That means you will have year 1 or year 3. Afterwards, he cannot be an auditor. So therefore, again, this is to make sure that these issues have been brought in. Provisions for non-assurance of audit client, again these have been brought in as a part of the discussions. Accounting, book services not allowed, administrative services are not allowed, valuation services are not allowed, taxation service to audit clients are not allowed, but right now it is deferred, but it is not allowed, might create a self-advocacy. So these are some of the things. In audit service anyway, statutory audit can't do, information text, he cannot be provide. Litigation services, you cannot provide. Legal services, you cannot provide. Recruitment services, again a recruitment service you may not be able to provide because you're appointing somebody. So there are so many changes that have been brought in which are much more in detail. I'm not going through, given this, this is a very important occasion for each one of you. I will just run through it because I'm already past 7:10. I'll take a couple of minutes and before I can open it for question and answers, because I'll tell you what, this session is not, you know many of these things, but I'm only trying to make a perspective as to what has changed, what is the awareness that each one of us has to take, what are the responsibilities that we need to bring in. Just imagine, we are talking about management responsibilities for an audit client, and so much of changes that have been brought in. So these are some things which one has to look at it. Reports on special purpose financial statement should include restrictions and use of distributions, which was not there before. It has been brought in as a part of the process. Breach of independence, mechanism self-corrections, mentions taken in the independence department. There are various things which have been brought in, where to whom you should report, when do you report to ICAI, all of these are required. Independence for assurance engagements, other than audit, they've again applied. No fees again, they brought in gifts and hospitalities, they brought in financial interest. Just imagine, audit, not only audit, they also brought in assurance. Assurance is what? You could do, let's say, a consulting service, you can do an accounting advisory services, or you can do, let's say, a certification for a specific purpose audits. There are so many things that you will do. All of these has also been brought in as a part for the other assurance engagements. The domestic laws I'm not going through, but just to let you know that you need to comply with standards on auditing, standards on engagement, assurance related party, SQC1, all of these you need to do it. There have been certain changes that have been brought in. I'll talk to you about it. You have to, members should use only CA. You cannot, directors office clubs not to use in the set position their visiting cards. Suppose if you are office bearers of this thing, you can't be using all of that. So there are various things that have been brought in. Again, disabilities, removal from registers, these are some things. Falsely claiming to be a member. Now, another important aspect is that you cannot, if you are not a chartered accountant, you cannot be signing or certifying any accounts. I think that's a significant change that has been brought in this ethics. No company, that means you cannot have a company which should be practicing it. as an LLP. So I think that is because LLP is only as a partner, but not as a company can be practicing it. Unqualified persons cannot sign. So therefore, there's a penalty, there's a conviction, and all of this. Maintenance of branch, you should identify in charge for every branch. Even within city, you could have multiple branches. You need to identify all of this. Professional misconduct, there are schedules 1, 2, 3, 4, 5, which have been brought in, that again the fees you cannot share, only under certain restrictions you can do it. There is also one important aspect that has been brought in, is in respect of this, there is a resignation by an auditor. I think what has been brought in is that the member, or there is a removal of a chartered accountant as an auditor. The chartered accountant has to write to the institute. I think this is a new thing that has been brought in, which was not there before. You have to write in, and I think the professional accountant or the chartered accountant who is coming as the next auditor should make sure that he takes care of all of this information before he accepts that information. So I think these are some things which have been brought in as a part of the process. Again, publications of books and articles, there are issues that you need to prefix CA. Those are the things only which is allowed. There are again sponsoring events. Again, it is only for the CA, which has to be prefixed is permitted. Advertisement of teaching cannot exceed 25 hours in a week. Cannot advertise teaching coaching activities. May have to put a board outside the coaching center with name, subjects taught. There are so many things that have been brought in. Again, these are again addressing those issues coming out of the teaching academy, which are coming through all of this. Television and movie credits, again, there are changes that have been brought in. Just make sure that it should not result in canvassing and all of that. Talk about which are factual, which are being done. I'm not going through it. Again, writing letters or press permitted to use CA descriptions, size, networking, all of that, which everything is done. Use of logo is not permitted. Strictly no. You cannot be using a logo, whether it's a network form or other, you cannot be using in all of that. So you need to comply with CA logos, these things. Now, these are some of the things which are very, very important. Now, accept. Now, this is where I want to spend a couple of minutes before I hand over it back. Accepts a position as an audit previously held by another chartered accountant. You should give it in writing. What are the things? Communications required for all types of audits. Grounds for non-acceptance of audit. Non-payment of undisclosed